Good morning and thanks so much for joining in. You're watching Ask BQ on BQ Prime. My name is Alex Matthew and with me is Smriti Chaudhary. We'll take you through the next half an hour of trade. We'll get you an update on Bajaj Finance as well as take all of the questions that you might have on stock specific information. That is whether or not you should buy a stock or whether you should continue holding something that you've already bought. The way that you can send your questions to us, you can either write to us on our social media platforms, including on WhatsApp, or rather on YouTube, or you can send us a message on the WhatsApp number that should be on the bottom of your screen right now. Let me get you both the guests for today. We've got Saurabh Jain of SMC Global Securities as well as Nilesh Jain of Centrum Broking. Gentlemen, thank you so much for taking the time and always a pleasure speaking to the both of you. Let me start with a quick technical check. I wanted to jump straight into Bajaj Finance, but then over the last half an hour or so, gentlemen, we've seen quite an up move in the equity markets as a whole and the benchmark index touching 19,800. In fact, as I speak right now, it's trading not too far away from that mark at 785 or 786 or thereabouts. I'll come to you first on this one, on the technicals. Nilesh, how does it look and why are we seeing this up move? I see that the Bajaj twins have actually moved up and are trading in the green from the initial bout of selling that they saw.
Morning, Alex. So, if you look at the recovery that we have seen in today's trading session in Bajaj Finance, the low that it has made exactly near about this 200-day moving average that is placed at 6,900, and exactly from those levels we have seen a sharp up move. So, this rebound I think is likely to continue, and we can expect this pullback extending towards 7,400 to 7,500. And I would be more comfortable taking long position on a breakout above 7,500. That is 25-day moving average major hurdle. So I would rather wait for a breakout about that. And as of now, it is looking good for a pullback to continue.
Smriti, we've been talking about Bajaj Finance since morning and significant update on the regulatory front for Bajaj Finance. And initially, I think because of the update, there was a bit of a sentimental reaction, but then we've turned the tide or seen the turn of the tide in Bajaj Finance trading the green. But very quickly, you want to take us through the key highlights of that regulatory update?
Yeah. So last night, RBI came out and said that it is barring its lending under e-com and its Insta EMI products. Now, shares did react to it in the morning trade and fell about 4%, which was a 3-month low for the stock, but is now up about 0.8%. Now, if we look at the stock, Jefferies came out with a report this morning that said that it sees a limited impact on the financials of the company. Because reason being that the 10%, it's only about 10% of the EMI customers that get impacted and only 5% of the total customer base. But let's take a view from our guests also. So how do you see the stock reacting in the longer term and do you see this impact lasting?
Hi, good morning. I think markets have clearly understood that this is going to have a limited impact. And in my opinion, I think things will get corrected in a quarter or two because it's a certain kind of a violation from the RBI guidelines. And moreover, I think both these products makes up minuscule part of the total disbursement. It is learned that it contributes around 0.2% of the total disbursements. Having said that, I think if you look at the Bajaj latest quarters number, they were astonishingly well. I think company is doing fine with the kind of growth that they are seeing at the jump in the profitability. Moreover, recently they have raised QIP also of 8,800 crore at a price of 7,270. I think it is and the stock is right now trading at those levels only. So it is a psychological, basically a price where you have issued new stocks to the institutional investors. I feel that in the longer term, one can expect 25%, 30% kind of a return from this stock.
Oh, so what you're saying is it's a buy at these levels as well and a buy on dip strategy?
Yes, that's what I mean, Alex.
Okay. Anything to add, Nilesh, on the charts? It's positive as we pointed out earlier. So what's the strategy that you would suggest on the charts?
As long as it trades above its major support of 200-day moving average, that is 6,900, I think buy on decline should be the strategy. Breakdown below 6,900 would be a cause of concern, but as of now, the chart looks positive and we expect further upside move to continue towards 7,400 to 7,500. And just to add one more point, if it breaches 7,500 on the upside, then we can expect another 500 point move towards 8,000. So the structure looks positive.
Okay, all right. So, gentlemen, there you have that, and viewers, there you have it. That's a view on Bajaj Finance, and in fact, the Bajaj twins trading positively after that update. So, it should tell you that what seems to be the consensus view is what the market is holding as well. And the consensus view from all of the analysts that we've spoken to since morning is that it's not going to be a very significant impact. Jeffries, by the way, pointed out that the impact could be as high as 0.5% of the PAT. So it's not a very significant impact. Having said that, let's kickstart the queries, and we've got a couple coming on WhatsApp as well. We've got Rajesh who's asked a question, and we've also got Girish who's asked about LIC. Now, the life insurance space, gentlemen, has been an interesting one to watch, and Life Insurance Corporation of India has been losing a little bit of ground in terms of market share, but it's still by far and away the biggest player in the industry. I will come to you first, Saurabh, on this one, because we've got Girish who's asking for a fundamental and technical check. Would you prefer LIC or would you prefer one of the private peers, the likes of SBI, for example? SBI Life Insurance has been gaining quite a bit of ground, especially when it comes to the market share.
In my opinion, I think Alex, it is very difficult to make money in this space, considering the fact that now people have started
Is
moving to
somebody gonna fix the
they are
audio, or
leaving
we
the traditional plans, and they are now moving to the pure term plans. And if you look at all the insurance companies, their valuations are also high compared to the international insurance company listed in the overseas market. You will find that the price to book value there is far cheaper than what is here in India. And I think if you look at the business metrics, these companies are finding very hard to grow their business. In my opinion, I think it is better to leave this sector as far as LIC or any other insurance company is concerned. In my opinion, I think banking on the financials makes on the banks makes more sense. PSU banks like I think Canara or Union, or in the private space, Axis looks more promising.
So avoid life insurance as a space is what you're saying. But any advice that you would give, Nilesh, on the charts, either on Life Insurance Corporation of India or any other of the private peers?
Well, Alex, the structure is looking weak for LIC, and after listing, we have seen a gradual decline. In between, there was a pullback, but that pullback was get sold into. Now, looking at the structure, I think there may be another round of selling that we might see at the high level. So it is better to avoid taking any long position in the LIC. Rather, one can look at HDFC Life. So within this space, HDFC Life is looking slightly on a positive side. It is trading well above short-term and long-term moving averages. And on the upside is open for 680 to 700 sort of targets. One can keep a stop loss below 610.
Point. We've got a question from Manoj. Do you have that on your screen?
Yes.
Smriti?
The question is about Harsha Engineers International. They've already bought the stock at 412 per share. They want a fundamental and a technical view on that. So let's start with you, Saurabh, first. What is your fundamental view on Harsha Engineering?
I think it is a space where a lot of activity is there. I mean, the sector is looking very promising. But since it is a new listing, hence we are not covering this stock. Better to take a technical opinion.
But do you have any other picks in this space? So you don't have specific coverage, but any other picks?
I think we like the industrials companies like L&T or Watek, Wabag, maybe Kalpatru are looking more interesting.
What about the technicals? Anything that you can tell us on the charts, Nilesh, about this particular counter? I'm not sure about the volume. Is it significant?
So volume is quite dry out here, and the structure is also not looking that promising. The counter is stuck in the range. On the upside, we are witnessing constant selling pressure at 460 to 480 zone. And I think there may be another round of selling in this particular counter, which may open downside towards 360 to 350. So structure-wise, not promising. I would rather avoid taking any long bet in this particular counter.
All right. Next question is from Yukti from Visakhapatnam, and they're talking about Nykaa, and they want a long-term view on the stock. Now, the stock has been on an up move. Saurabh, how do you see the stock in the longer term, Nykaa?
See, the company is is now on the is making money actually. Earlier they were burning money. They have lot more products they have added to their portfolio, and it's gaining traction. We are not covering this stock, and it's not in our buy list. But yes, the story is looking good, and in the next few quarters, it is likely that the company is likely to post good set of numbers.
Okay. Any view on the technicals, Nilesh, on Nykaa?
Well, Alex, the structure is indicating that we might see this pullback to continue, and it is on the verge of a breakout from its multi-month resistance zone, and that breakout is placed at 158. So any breakout above 158 will open upside towards 175 to 180. So could be a good opportunity to take a long bet post breakout above 158. And if somebody is already holding the long position, can continue to remain long, keeping stop loss below 145. This structure is looking positive.
We've got Rajesh Maheshwari, who's writing in from Indore. Rajesh, thanks so much for taking the time and for writing to us as you normally do. Asian Paints is the counter that he wants to know about, and he's saying that he has this at an average price of 3,150, and he's got as many as 40 shares, which he's held for some time. He's saying that the stock appears to be not moving anywhere for quite some time, and he's asking whether it makes sense to remain invested and should he exit. Based on the fundamentals, I think to a certain extent there's been a bit of chop and churn because of crude oil prices, but then they seem to have settled around that $80-81 per barrel mark. But where it goes from here is anybody's guess. Having said that, the entire building material space seems to be buzzing, right? So will that bode well for Asian Paints as well? What's the view, Saurabh?
I think, Alex, this time around, I think the festive season has got shifted from from the second to third quarter, and their expectation that the things will improve for the companies in the FMCG sector. I mean, even the Asian Paints management look confident that this quarter would be more. They will they will see generate good amount of revenues and sales. So I would recommend that better to wait for this quarter, see how December quarter's numbers pan out, and then take your decision. For this quarter, it is a hold.
Nilesh, any cues on the chart on this counter?
The structure is indicating that this pullback might extend towards 3,200. So it is better to stay put in this particular counter, keeping stop loss below 3080, and currently it is trading about 3120. So I think at current level, the risk and reward is also looking favorable for the upside target of 3180 to 3200.
Right, fair point. Let's move on to the next question. This one is from Bhavesh from Orissa, and they're talking about Bajaj Hindustan Sugar. They have already bought the stock at 19 rupees, and the stock has doubled at this point. He's asking if he should book profit at this time. So let's expand on the sugar space. How are you viewing the industry as such at this point? And this specific stock, Bajaj Hindustan, should Bhavesh continue holding the stock, or should he sell it at this juncture?
See, if you look at the sugar space in the international market, we saw that the sugar prices were roaring and soaring. But here in India, there are a lot of government interventions, and the companies are finding difficult to push prices in the domestic markets. Some companies are actually coming out with the more premium variety of the sugars so that they can fetch a higher amount per kg. But I think the space is also more about the ethanol story, ethanol blending. Here in India, the government is targeting for 20-25% kind of a blending, and companies are trying to make money on that front also. Bajaj Hindustan is relatively a smaller player. I think it is better if you are generating some profits. I think it is better to lock them, because it's a highly volatile business, and the government interference is a lot in this space.
All right, so a sell at this juncture for this stock. Nilesh, how are you viewing this on the charts?
Similar view, Smriti. Looking at the structure, the counter looks slightly overbought, and being in a cyclical industry, this particular counter has witnessed some amount of selling pressure at the high levels as well. So I think it is advisable to keep booking profit at the high levels, and if at all we see any decline towards 28, 29, that may give another opportunity to make a fresh entry on the long side. So it is better to take out profit at the high levels.
All right. Next up, we have a question from Chandrasekhar, and they are already holding this stock, PG Invit, at an average price of 113, and they plan to hold and accumulate this stock. What is the target for the next 6 to 18 months on this stock? Saurabh, any view on this?
Any coverage, yeah.
won't be able to give comment on this.
So okay, so then if you're not, and I understand this is an InvIT, and so maybe we'll have to do a personal finance conversation about, or maybe a slightly different conversation about InvITs and REITs and how they fit into your portfolio. But in the infrastructure space, since we're talking about InvITs, any stocks that you like in the space, Saurabh?
I think if you look at the infrastructure space, I think one good company that comes to my mind is HG Infra. Last quarter was not up to the mark. I think the revenues were less than the market expectation. But this, if you look at this company, the order book is very good, and the government spending is also high. Consider the fact that they on the infrastructure side, and these companies are making good fortunes because of that. So in my opinion, I think HG Infra could be a good bet for a one or 2 year perspective.
2 year perspective. So then from that queue, let me ask you, Nilesh, HG Infra is currently trading at 862 or thereabouts. And it's over the last month or so, it's down about 7.7%. Does that mean that this is a good area to accumulate for a period of 2 years, which is a slightly longer term time frame?
Well, let's say it has a good support near about 800 levels. So if at all we see any further decline, that may give a good opportunity looking at the risk and reward. The volumes are a little low in this particular counter, but since it is approaching near the support zone, there could be a good contract can be taken for the pullback to continue towards 950 to 1000.
All right. Let's move on to the next question. Next up, we have a question from Sushmita from Nagpur, and they're talking about Sula shares. They've already bought the shares at 379 and are looking for a medium-term outlook. Saurabh, how are you viewing this wine stock?
I think that the company is putting up a good show. The management is quite confident of growing their premium side of the brands. I think premium wines upward of 600 rupees are getting more traction. I think companies on a growth chart. It looks a good hold.
Right, let's take a technical check on this as well. The stock has only moved up about 2% in the last 1 month. Nilesh, how do you see this on the charts?
Well, post listing, we have seen a gradual up move in this particular counter, and whatever decline we have seen in past few months, that has been bought into. So, looking at the structure, we feel that it may extend further towards 550 to 600 from next 4 to 5 months point of view. So, the structure is looking positive. One can keep a trading stop loss below 460, and I would suggest to stay put.
So to an entirely different company, Radico Khaitan is the one that we're talking about, and Ahmedabad is where the question is coming from. Incidentally, Vinay is asking about this, and he's already bought Radico Khaitan at levels of 1,375. Should he add at this juncture, or should he sell? Saurabh, what's the view?
I think this time period is usually goes well for all the liquor companies. There is a good amount of festive demands, and the wedding season is also there. So I expect these stocks to perform well. I think one can add more to it.
Any view on the charts, Nilesh, on Radico Khaitan?
Absolutely, Alex. The structure is looking very strong, and the counter is forming a rounding bottom sort of formation, and it is also on the verge of a breakout on the same. So breakout level is placed at 1480. I think it is better to stay put for the upside target towards 1550 to 1600. So it can also be bought on declines, and if somebody is already holding, then I would suggest to remain in this particular counter for the further upside move to continue towards 1500 to 1600.
Okay, fair point. This is perhaps out of syllabus because it's not something that any of our viewers have asked, but I have this question, and Saurabh, this one's for you. Tata Technologies, we've just got the pricing of the IPO. Do you have a specific view on this one, and what should retail investors do?
I think I haven't gone through the RSP as of now, but this is a more sought after issue. I think there will be a lot of interest, and even grey market is showing good amount of premium. There will be a lot of action in this space. I think there will be higher subscription this time around QIB, retail, HNI. So I expect this stock to have a good listing.
Okay. Another pack that is really, actually couple, I'm going to ask a couple of questions here. So we've been discussing IT since morning, because yesterday we saw quite the pop on the back of the updates from the US where seemingly the worst is over and they might just manage to engineer that soft landing. So questions about discretionary spending perhaps could go into the next couple of quarters, but come first quarter of next financial year, we could see an up move in terms of operational performance. So from that perspective, Saurabh, do you have any advice that you would give on IT? Would you say that the frontline IT companies can be looked at, and which of those companies would be your top picks?
At least as of now, if you look at the Indian IT sector, they are not. What is happening is whenever we see gains in the Nasdaq, here in the Indian versus IT companies trying to match those gains. But the fact is that because of their spending curbs, these companies are finding to get more businesses. Their IT companies are rising because they have done freeze on the employment. They are taking employee off the bench. They are trying to restore their margins. That is why we are seeing good amount of gains in the companies listed overseas in the US market. Here in India, I think these companies are still finding difficult to gain businesses. The management commentaries are strong, but the order book to bill is weaker here. The attrition is somehow has now stalled. I mean, it is now at the comforting side. But I think it is very difficult to take a holistic view or a call that IT sector is likely to gain in a quarter or two. I mean, the numbers will change. I think it is better to wait for at least earnings till the March quarter end.
All right. Fair point. Let's go to you, Nilesh. How are you viewing IT as a sector, and any specific stocks that you're currently constructive on?
All right, so Smriti, Nifty IT index surpassed 32,000 mark right now. And looking at the pullback that we have seen in last two trading session, I think the recovery that we have seen in this particular index may extend further. And we are expecting Nifty IT index to move towards 30,000. So another 1,000-point rally we are expecting in Nifty IT index. So within this space, first of all, we are liking Infosys for the upside target of near about 1480 to 1500. One can keep a stop loss below 1400. The another stock that we are liking from this space is SCL Technology. Today we have seen a fresh breakout from a triangle pattern. So SCL Technology is also looking strong for the upside target of 1350 to 1380. One can keep a stop loss below 1270. And lastly, Coforge is another counter that is on our radar for the upside target towards the 5600 and 5700. One can keep a stop loss below 5400. Overall, large caps and also mid cap IT index are looking positive.
Saurabh as well as Nilesh, thank you so much for joining in and for answering all the questions that you did answer, and for the views that you shared, Saurabh, on Tata Technologies. Thank you so much for taking the time. Viewers, hopefully this conversation has benefited you and that you've gotten actionable insight into the stocks that you are interested in. Remember, we're live through the week at 11:30 and we'll be able to answer all of the questions that you might have. So we'll be back tomorrow. But in the meanwhile, do stay tuned. Lots more coming up over the course of the day. This is BQ Prime.